Hello folks, this is Abhinay Gupta from Wikipedia World, and today we'll continue with the topic accounts of the companies. So we have already dealt with section 128 and section 129 in our previous lectures that dealt with financial statements, inspection, preparation, maintenance, periods and stuff, right? And we have also seen the penalties and responsibilities for the same. Today we'll move a step ahead and cover section 130, 131, 132 and 133 in the coming lecture, right? So the following three sections starting from 130 to 132 will not be very important from your exam point of view, right? But still, since it is the part of the Companies Act, it is a part of the syllabus, we'll continue it, we'll complete it because it may or may not be very important for law. It may be important for your audit paper. So when we're doing this part of the course, we'll try and deal with all the sections that come our way, right? So we'll discuss the three sections very briefly. We'll just touch them, but that will be enough for your exam if a question is asked from these sections. Section 130 deals with reopening of your accounts. Now, is it actually possible to reopen your accounts once they have been freezed? The answer is yes. When? Who has the power to reopen your books of accounts? So the power to reopen your books of accounts once it has been freezed lies with the central government, the income tax authority, SEBI, any other statutory authority, and the authority or any person concerned. Right? So these are the five people: the income tax, SEBI, CG, the statutory authorities. They, if they want and if they think that maybe the financial statement is not prepared with a true and fair view, there is a dispute, or there's something suspicious, or something needs to be rectified, there was an error that has been identified, whatever be the reason, right? These are the people who have the authority to walk up to the court or the tribunal. They may make an application to the court or the tribunal, and then the court or the tribunal has the power to reopen the books of account. The central government or the SEBI or the income tax authority, they can't open the books of account. They will have to approach the court or the tribunal, make an application, go formally, and if allowed, they'll be allowed to open the books of accounts. So this section also gives out some of the basic reason why the books of accounts should be opened. So which includes, for example, if in any relevant earlier years, the accounts were prepared in a fraudulent manner. So in due course of time, if the Income Tax Authority or the Security Exchange Board of India, they come across any evidence which lay a serious doubt on the financial statement that has been prepared and freezed, and they feel that it has been prepared in a fraudulent manner, they can make an application. And secondly, the affairs of the companies. They think that the affairs of the companies were mismanaged during any relevant period, which cast a doubt on the reliability of the financial statement. So in these two circumstances, which have been already specified in section 130, then the above five people that we have discussed can make an application to the court to open the books of accounts. So these are the only places where the books of accounts can be reopened. Next is section 131. Section 131 deals with voluntary revision of the financial statement or the board report. So section 130 was compulsory reopening or reopening on application or with the intervention of the court in case of any fraudulent activity or if the accounts were mismanaged and stuff. And section 131 gives the power to the board of directors to voluntarily revise their financial statement of the board report. Now when do they do that? On a layman term basis, if you think, then when will the need to amend the financial statement of the board or the board report arise? It will arise only when they are at fault, they are defective. So if the financial statement or the board report do not comply with the provisions of section 129 that we have discussed or section 134 that we'll be discussing in the coming lectures, even that deals with the financial statement and the board report. So if there is a non-compliance with these sections, then the director of the company may prepare a revised financial statement or a revised board report as the case may be, right? And that can be done in respect of any of the three preceding financial years. but they'll have to obtain an approval from the tribunal. That is a mandate. So the game is not very easy for the directors that okay, if we have made a non-compliance, we can at any point of time voluntarily revise the financial statement. No. Even for that circumstance, they will have to approach the tribunal, take its formal approval, and then revise the financial statement or the board report that has been frozen once. Right? Now, what are the other reasons for revision? The section 131 straightforward says that the reason for revision will be compliance of law and nothing else. Right? Now we'll see what are the procedures that has to be followed by the board of directors to revise the financial statement or the board report. So for this, as we've already discussed, they need the approval of the tribunal. So the board of directors will apply to the tribunal. They'll file an application to the tribunal for obtaining the approval for revision. Now, once the tribunal gets that application, it is the responsibility of the tribunal that it will issue a notice to the central government and the income tax authority both, and ask them to give out their representation on the financial statement on the matter on the application. Right? Now, the central government and the income tax authority, they will look into the matter and accordingly give the representation back to the tribunal. Then the tribunal shall take that representation and then it shall give out the decision of revision. So like in some circumstances in the act, you'll see that it is mandatory for you to forward it to the court, but it is not mandatory for you to take the recommendation. Like you'll see also when you discuss the chapter of compromise and restructuring and stuff. But over here, if you have given it out to the central government and the IT department for representation, you will have to very formally consider the representation before moving ahead to make any decision whether or not to allow the revision of the accounts. And finally, whatever the tribunal orders, that will be filed with the registrar of the company, and accordingly the board of directors will be eligible or not eligible for revision of the financial statement or the board report, as the case may be. So with this, we are done with section 130 and 131. We move ahead to section 132, which is NEFRA. NEFRA is the National Financial Reporting Authority. Now what is NEFRA? National Financial Reporting Authority is an advisory body to the central government and the ICAI on matters relating to the accounting standards specifically, right? And they're also a regulatory authority for accounting, auditing and the financial reporting purpose. So the concept of NEFRA, the National Financial Reporting Authority, is not very new. We had NACAS in place of NEFRA in the old act, which was 1956, right? As per section 211 of 1956, the Companies Act, it required that the financial statement of the company had to be prepared as per the accounting standard, right? And those accounting standards had to be notified. Who would notify it? Again, the central government. And in that case, in the previous act, the central government was supposed to consult NACAS. NACAS being National Advisory Committee on Accounting Standard. That was a committee, that was an advisory body, only an advisory body as per the previous act, that gave out the recommendation related to the accounting standards. And section 210A was introduced in the old Companies Act to constitute an advisory committee on accounting standard, that was known as NACAS, right? So NACAS was the existing body, advisory body in the previous act, the previous Companies Act, that was 1956, and now that has been replaced in the new Companies Act 2013 with NEFRA, National Financial Reporting Authority. And in the new act, NEFRA is not only an advisory body for accounting standard purpose, it has also been given the powers to regulate the accounting, auditing and the financial statement aspects. The role of this body has also been extended from accounting standard to the auditing standards also. Like they are the advisory body for auditing standards too, as per the new Companies Act 2013. So with the establishment of NEFRA, the Company Act has widened the power of the authority. Now it can recommend, enforce as well as monitor the compliance of auditing as well as accounting standards. Right? So this is the extension of the power. This NFRA is actually an extension of NACAS. It's only a difference of nomenclature and some add-on powers to the body. So basically there are 2-3 things that we should be discussing about NFRA, which is the nomenclature difference that we have already discussed from NACAS to NFRA. The second is the purpose. Again, that has been discussed. The purpose was to be extended. The help, the advisory was to be extended to auditing standard. And it has also been made a regulatory authority for auditing, accounting and financial reporting purpose. Now the powers. Now let us see what are the powers that have been vested on NFRA. So NFRA has the power to make investigation. Right? They have the power to make investigation either suo motu or when they have been referred for investigation by the central government. So what will they investigate into? They will investigate into the matters of professional and other misconducts actually, which is committed by any of the member or the firm of chartered accountant. Right? So when you study your audit, you will have PE, a section in audit, that is professional ethics. There you come across the schedules, Schedule 1, Schedule 2, Part 1, 2, 3, 4, Part 1, 2, 3 with various clauses that defines the professional misconducts, the ethics, like where the ethics is compromised, that is deemed to be professional misconduct, and what are the consequences, what are the penalties. So NFRA, as we can see, its power has been extended to auditing standards along with accounting standard. So they have also been given the power to investigate into the matter of professional misconduct, right? And there's a very important line, a supreme power that has been given to NFRA. Like the Act says that no other institution or body shall initiate or continue any proceeding in the matters in which NFRA has already started a proceeding, where NFRA has started an investigation. So all other proceeding that is existing will have to be paused or that will come to an end, and no other proceeding will start with any other body so far as NFRA is into the investigation mode. NFRA also has the power to debar the chartered accountants, the member of the institute, right? The office bearers, actually the qualified members, people who go out in the market who have the power of attestation, power of signature, they can be debarred from using the signatory powers for a period of 6 to 10 years, 6 months to 10 years, right? NFRA also has the power to impose penalty if professional or other misconduct is proved after the investigation that was done by it. So if it is proved, then on individual level, the minimum penalty will be rupees 1 lakh, which may also extend to 5 times of the fees received. Fees over here is the fees that the CA will receive for any audit or any sort of work extended, any sort of help, any sort of professional service extended to its client, and where it has proved to be a misconduct, like the member or the firm has got into a professional or other misconduct, then the fees that they have taken after that misconduct will be penalized up to 5 times. Right? So that is the maximum limit. And if it is a firm, the minimum penalty will be rupees 10 lakh and the maximum will be 10 times of the fees received. Again, fees received here means the same that we have discussed. So that was basically for your knowledge purpose, that you should be knowing what NFRA is. You may be asked questions, although the topic has not been very important as per your study material or practice manual 2. There has been no questions asked in the past, but extra knowledge is never dangerous for you, right? So with this we come to an end of section 130, 131 and 132, and now we move on to section 133, which is the accounting standards prescribed by the central government. So what do we see in section 133? Section 133, here we have the notified accounting standards, the accounting standard that has to be followed for the preparation and presentation of the financial statements. So how are these accounting standards approved or brought into force by CG? Like what is the entire hierarchy that has been followed, who prepares it and recommends it? So we'll see it. So accounting standard is being approved in stages. So on the first stage, it is the ICAI who recommends the accounting standards to the central government. they come out to the central government and say, okay, these are the accounting standards, these will be the provisions of the standard that we think should be applicable. Now, the NEFRA that we have been talking about so far, National Financial Reporting Authority, they will advise the central government. They will examine and advise the central government on the accounting standards recommended by ICAI for the companies. Right? And then CG will notify the accounting standard, which will be then known as the notified accounting standards. But they'll do so after considering the recommendations given by the ICAI and the examinations done by the NEFRA. And then they will notify an accounting standard, which will be known as notified accounting standard, and these notified accounting standards will be followed for presentation as well as preparation of the financial statements. So on 16th February last year, that is 16th February 2015, the company's Indian Accounting Standard Rule 2015 were notified. There was a notification on 16th February which says that with effect from 1st April 2015, the company's Indian Accounting Standard Rule 2015 will come into existence. So that is what section 133 has to say. And now the applicability of accounting standard. So far, the accounting standard notified by central government, which are to be notified by NEFRA, if there are some other new accounting standards or some has to be amended, unless and until they come into force, the old accounting standard that had been notified as per Companies Act 1956 will continue to be applicable. So there is no change with the accounting standard, but with time to time you have the notifications for updates, for changes, for minute detailing. So those are the only things. And now we'll see the definition of accounting standard as per section 2 clause 2, which says accounting standards means the standards of accounting or any addendum thereto, whatever has been added by the central government by its notification or official gazette or otherwise, or any addendum thereto for companies or class of companies referred to in section 133. So even the definition includes the reference to section 133. Right. So with this, we'll be concluding the lecture for the day. This is Abhinay Gupta signing off. Thank you so much.